how would a beginner increase their stock portfolio?
Honestly, a beginner should only increase their stock portfolio, get exposed to the markets if they have an idea of what they're doing. Because if you're a beginner and you have no idea about how stocks work and you just want to jump in there, get exposure through index funds. Buy as many index funds as you like. If the market dips tomorrow, if it has a period where it's not making you a lot of money, buy more of index funds. Get this massive amount of index funds in your portfolio, keep them for the long haul. But the only way you should be increasing your exposure to the market is when your current exposure is giving you money. For example, a lot of times traders wonder if the market is healthy or not. A healthy market is where stocks move as per plan. And the best way to find out if the market is healthy or not is to see how your current positions are running, how your past trades are running. Naturally, if
Hmm.
my past five trades have given me a loss, why should I go for a large sixth trade? I should do the opposite. I should dilute my holdings and find out what's going on. There can be two things going on. Either the market is unhealthy or my skills are not up to the mark. In this, if the market is unhealthy, I need to sit out, right? Wait for things to become better. And if my skills are subpar, I need to educate myself more. Maybe take a course with a legendary seasoned trader. Maybe read more books. Maybe watch more YouTube instead of Netflix. So you wanna increase your exposure to the market based on the inputs that your trading journal is giving you. So naturally, every trader is required to journal their trades. Why you bought something, how much you bought, how much you made. There's a couple of columns. And also, if you lost money, what did you learn from it? If you sold at a particular point, why did you sell? What made you sell? So, this is a rigorous exercise. It's incredibly boring, but it tells you so much information about your trading and your persona that you really are guided by your own data. For instance, if at the end of 6 months you look at your data and you realize all your day trades have worked out nicely, but your swing trades have done poorly, then your data is nudging you towards day trading.
Swing trading is a long-term trading, right?
Swing trading is basically where you, from 2 days to 3 months to a couple of quarters, you want to
Okay.
carry a position for several weeks until you see a signal to sell. And of course, we have positional trading where you take deep positions in stocks for the long haul. And then finally, there's long term investing where you just marry a stock, right? And
Right.
swing trading is basically you're dating a stock, right? You're taking the stock out for dinner. Maybe you'll go for a drive over the weekend, and then you're like, okay, this is now working out, tada, or this was good. And long term investing is a marriage where you're like, okay, I want to make kids with you. Let's settle down. So basically, that is swing and long term investment.
Two things that I would like to say is this is what I've also learned: journaling your trading, past trading, because it will also get you will also get to know what kind of a trader you are.
I mean, yeah, trading will give you so much information. It'll also give you an idea of your average gain, right? So if you're making 17% on average on your stocks, so when they rise from 100 to $117, you end up selling. That's a 17% gain. If that's your average gain, naturally your average loss needs to be lower.
Right.
Now, tomorrow, if you buy a stock and you're actually earning 30% on it, that's far beyond your average gain. So you can let this stock fluctuate more than usual because your average gain is anyway covered. I mean, so much information about your trading. Not only trading, I mean, if you hit the gym, it's always recommended that you track your lifts, how much you lifted, how many reps you got, what exercises you were doing. And if you have this data over several months, you get the truth of your gym gains, right? You know where to work, whether you're making progress, what's going to help you make further progress. If you have no data, you're just swinging in the dark. And
Right.
honestly, every super performer is working with data. I mean, cricketers have tons of data about their stance and their bowling speeds, and the same with baseball players and basketball players. I mean, data is running everything.
So, what are the common differences between US versus the Indian stock market?
I mean, personally, I've been exposed to both. I trade the US markets from my sister's brokerage account. She's based in Houston, Texas. The thing with US market is it tends to be more mature. It tends to be wilder in terms of its moves. So in Indian stock market, there's something called a circuit, which basically means if it's a cash stock, the maximum it can rise or fall in a given day is 20%, right? No matter how much buying interest there is in a stock, it can only rise 20% and it can only
Mm-hmm.
fall 20%. And naturally, this is there to safeguard retail investors, to safeguard amateur investors. I've seen some wild movements in the stock market of United States. I've seen stocks open 50% higher and also open 50% lower. So naturally, the US market is more mature. If you're trading US markets, you really need to be skilled. That's one difference that I've noticed all this while between US and Indian markets. And naturally, if you are good with technical analysis and you're good with charts and reading them, you can pretty much trade any market. You can trade commodities. So in India, spices are traded quite heavily. You have jeera, turmeric, dhania. All these are traded quite heavily in futures and options. And if you have knowledge of technicals, you can be around the world and trading any security as long as it's plotted on a chart.
Oh wow, I did not know that. I only know you can only trade. Well, I've traded in crypto,
Right.
and we'll touch on that also. But I've traded with commodities, and I've traded with cryptos on currency, foreign exchange currencies. I've never knew you can also trade in like spices also. It's a
Yeah, it's quite wild. And so, for example, if you buy one lot of jeera in India, cumin seeds, right, it's going to be 100 kilograms. And if you don't square off your position, you can actually take physical delivery of this in Rajasthan. So this stuff is pretty interesting. And jeera went up quite a bit. Now it's corrected back, but it went from 22,000 rupees to 66,000. That was quite a jump in Jira, and I made a video about it on my Instagram, which people really enjoyed. And most weren't aware that spices can be traded as well.